Good morning, everybody. This is the Live Market Open for Thursday, June 2nd. I'm Michael. I'm a Forex Crunch and Market Movers podcast, doing the show as usual for FX Trade. So, good morning to everybody. Today is Draghi Day, D-Day. We'll talk about recent developments in markets. We did have quite a few market movements. Talk about the various charts and levels, and of course, the next 24 hours. Your questions, as always, are welcome at this address here. If you cannot see the chat box alongside the screen, it's tlk.io/fxread-forex-live-video. Today's special segment is about the ECB, of course, preview, sort of longer preview for the European Central Bank's decision today, the main event on the calendar for the whole week, I would say. So what's going on in markets? We're getting closer to another big event, tomorrow's non-farm payrolls, and we have some figures out. At the moment, the expectations remain the same. We had the ISM manufacturing PMI. Today we'll get another hint. Regarding the OPEC meetings in Vienna, by the way, the ECB is also meeting in Vienna, not in Frankfurt. There are rumors about quotas, about the Saudis trying to be friends with everybody. I don't believe there will be an agreement, but at least there are some sort of more positive comments coming out from there. Brexit polls continue tightening. At least the last polls that were published yesterday showed a dead heat race, 41-41, according to YouGov. I must say it isn't a change from the previous poll, but it doesn't help the Remain campaign, and the pound still feels the heat. Okay, and also dollar-yen feels the heat. Yesterday we had a formal announcement of a delay of the sales tax hike in Japan to 2019. There will also be fresh elections in Japan to the upper house, not the lower house, which is more important, but nevertheless, this will sort of be a test for Abe's leadership. As far as I know, he has basically no serious opposition. So anyway, elections are held there in July, and this will be a test that he will most probably pass quite easily. Anyway, but dollar yen, as we talked yesterday in detail, also moves on the stock market, the Nikkei, and it fell again, so did the dollar yen. Okay, data we had yesterday. Eurozone PMIs were quite mixed. They were final manufacturing PMIs for France, Germany, and the Eurozone, and some fresh figures for Italy and Spain. Nothing to write home about. We did have a positive surprise in the UK PMI. Okay, so some good news for Britain with 50.1, and the manufacturing sector in the UK is back to growth from contraction. This had a very limited impact, even more limited than usually, because of all the focus on will I stay or will I go? Should I stay or should I go? We're exactly 3 weeks towards the Brexit. I'll add regarding the Brexit that usually with elections we have exit polls, and I just read an article that there will be no exit polls at the moment, at least. So at 10 p.m. UK time in 3 weeks from now, the polls will be closed and speculation will begin. We'll have the figures coming out county by county, province by province throughout the night. Getting back to the data, ISM PMI went back. That's in the United States. It beat expectations, 51.3. That's good news for the American manufacturing sector, but unemployment component did not change. It's still in contraction territory, just under 50 points at 49.2. So it doesn't really change the picture for the non-farm payrolls, as aforementioned. For New Zealand, we had good news with the second consecutive rise in milk prices, 3.4% this time after 2.6% last time. The Kiwi is supported. In Australia, we had figures offsetting each other. Retail sales missed expectations. Trade balance came out better than expected. All in all, the Australian dollar is still enjoying the better than expected GDP figure from the previous night. Okay, so good morning, Luca. Good morning, Fabian. Good morning, Geddes. Okay, before we move to today's events, of course, let's look at the charts. That was at pound yen, but let's begin from the top by the regular order. Okay, so euro dollar is strengthening just a bit, made it above the 111.80 line. Well, this morning it's by a bit flat, but it did net you back on air. Sorry. Don't understand the comment, Jax, but good morning to you. Good morning, Ed. Anyway, 111.80 is the level we crossed. Now we're sliding towards this level once again. I can explain this strength in euro dollar as some weakness in the US dollar that we've seen against other currencies and it reached the euro. All in all, the moves are somewhat limited because of the ECB meeting today. So we did see a very good month of May for the US dollar, and now we're seeing it weakening. Also, we've also seen a good month for the pound, which almost beat the dollar. It only fell in the last day of the month. That was basically Tuesday, 2 days ago. And now we're seeing a reversal of this trend. So it was selling May and go away for many currencies. Now they're rebounding. Yeah, so comment here by Ed. Saudi government has a mindset that they could buy and sell people and situations you can trust. My experience, not what I read. Good afternoon, Mattia. Yeah, the Saudis, they're the biggest oil producer in OPEC, and they care mostly about themselves or only about themselves. Yeah, but they're not alone. OPEC's share of oil production has squeezed over the years. More production from Norway, the UK, Canada, Russia, non-OPEC countries. So, and now that Iran, their biggest rival, which is an OPEC member, is coming back online, they have less influence. I mean, well, they do have significant influence when they forced OPEC not to cut production back in November 2014. They triggered a big crash in oil prices. Okay, so they still have a lot of power, but not as they used to have back in the 70s, 80s, and 90s. Anyway, let's continue. Euro dollar anyway. The levels I'm watching, 112.50 and 111.30. Quite a choppy currency pair. What we're seeing, low support, 110.70. We'll talk about the ECB in a special segment soon after we finish the regular stuff. So anyway, these are the levels. Pound dollar, continuing its slide. We dropped under one. Sorry for that. Anyway, 143.70 is support, followed by 142.80 resistance. At the moment, 145 and 145.80. I would say 145.80 is strong resistance, and 147.70 is the 1 month high seen in early May. Okay. Any fresh opinion poll coming out today, tomorrow, will have a bigger impact than any economic figure, at least until June 24th, which, by the way, is the day after the referendum, of course, very important for the pound, but also will have a visit, those of you in the UK will have a visit of Donald Trump. It's still unclear if he'll meet UK Prime Minister David Cameron, especially with that timing. Let's continue. Dollar yen. Quite a roller coaster on dollar yen. The reports about the sales tax hike delay at the beginning of the week sent the pair higher. Stocks were higher. The 111.50 was the top, and then from there we fell on the buy the rumor, sell the fact, and also weakness in stocks in the US, and more importantly stocks in Japan, Nikkei stock index. So I still see 108.25 as strong support. Currently we're at 109 and the second consecutive day of falls. All right. So dollar yen, we had a special segment about that. You can watch again the replay, the clip that we did for that. Moves a lot with stocks, moves a lot as a safe haven, and can't say I'm bullish about the dollar yen. Dollar CAD, same old, becoming much more choppy. This 130.80 line, which worked so nicely for quite some time, is not that relevant anymore, I would say. Sorry. Sorry for that. Anyway, 130.80 is the level we're currently hugging. So 131.70 is stronger resistance. Support still the very round number of 130, and 129.10 is very strong support on dollar yen. See here a few more comments. Last read, big 100,000 signature petition was presented to Parliament to ban Trump from the UK entry based on his racist chants. Yeah, but I don't think they'll block him from entering. But it just shows the sentiment against him for all his racism. And Lucas says he's gonna have tea with the queen, then build a wall across the channel. Yeah, sounds like a plan. Yeah, he's been at loggerheads, especially with the new mayor of London, Sadiq Khan, which is a Muslim of Pakistani origin. Anyway, let's continue. Anyway, dollar CAD I would say 130, 170, and 130 are the levels to watch. 129.10 as well. Aussie dollar made it very nicely to strong resistance at 73. Okay, that's when the GDP publication that beat expectations, but it never managed to break, and it fell quite quickly. Support 71.75, followed by 71.40. The Australian dollar is losing some of the mojo, isn't falling that much, but struggling to keep up the gains. Okay, there have been some doubts have surfaced about the real strength of GDP because because the internal figures show lack of investment and things like that. I still think it's good news and that the RBA will not cut rates anytime soon, but anyway, this wasn't enough. There's some kind of a risk-off sentiment, stronger yen, and weakness in all the rest, but I would be careful with that. I mean, we're seeing the euro and the yen strengthen, but not, and the rest are weakening just a bit, though. I would say it's more concerns about the Aussie GDP. Kiwi also falling off the highs this morning, 68.40. We almost reached that level. 68.20 was a previous line. The milk prices sent the Kiwi higher. Okay, but now we're back to struggling with 68, 67.20, and 66.70 are lines of support. See here more comments. Those Kurchi dogs don't like him, will allow him entry, but bite him on the desk. Yeah. Then they'll pretend they're Muslim dogs and have them deported. Yeah. Anyway, for that, Luca shares with us a chart about seasonal behavior trends from Kathy Leon, one of the best analysts and traders out there. Let's share it with everybody. Hello, June. These are Kathy Leon and Boris Schlossberg. So these are seasonal trends. Very interesting read. So what should we expect? Well, dollar weakness is what I see in general, right? Yeah, dollar index fell in the last 1, 2, 3, 4, 5, 6 years. And we've seen this weakness against the yen, the euro, the Aussie. Pound, it's mixed against some currencies. Yeah, seasonality shouldn't make sense. I mean, each time we have different circumstances in markets, but when it's a pattern, and we shouldn't ignore it. So that's what's going on. Okay, so thank you very much for that. These are really great analysts, Kathy Leon and Boris Schlossberg. And also Adam Button of Forex Live covers seasonal patterns. And as I mentioned, May was positive for the dollar and the pound. I think there were good reasons, strengthening, more hawkishness from the Fed, and better opinion polls for the Remain campaign in the UK, but it's also the seasonals in play, and things are a bit changing now in June. Okay, let's continue. We talked about many currency pairs. We have more to cover. The dollar is weakening also against the Swiss franc. 98.50 is support under the 99 level. Parity remains resistance. 98 is further support. Euro Swiss not going anywhere fast, around this 110.50 level for quite some time. 110 and 111 are lines that I'm watching. Euro pound, here we've seen a big change. So technical lines are working quite nicely. We had 76.50 as a good separator of ranges, fell initially to support, bounced back up, found resistance there at 77.40 before crashing down, finding support there at 75.60. After 75.60, we had a range 75.60 to 76.50, and then boom, another move that even topped 77.40, and now 77.40 works again as support. So euro pound again, if the UK leaves the EU, it's also the EU being left out, but we are seeing some movements, of course, on this cross, and the movements are very, they look very nice on the technical charts. So watch this space, as they say. Yeah, thinking we may see dollar spike on a strong NFP, then dollar retreat. Yeah, this makes sense. I mean, the figures that came out this week from the United States or in the past 10 days or so, they weren't impressive. For me, they strengthened the case for July rate hike and not June. Of course, delaying the June hike because of a Brexit always makes sense, but also, yeah, also the data supports that things are okay. I mean, inflation, the core PC price index was A-okay at 1.6. I mean, exactly like last time. Retail sales, oh, that was a few weeks ago. Sorry, core durable goods orders were weak, but the headline was okay. Yellen talked about coming months, not the next month. Everything sort of points to July. And also yesterday's ISM non-manufacturing, the ISM manufacturing PMI pointed to the same direction, okay? So I agree with that. Euro yen, 122.22, big fall, of course, in euro yen because of the strengthening of the pound. Sorry, a bit confused this morning. Strengthening of the yen we've seen yesterday. The euro did manage to bounce back up. 121.65 is very strong support. We didn't really reach that line. We did dip under 122. 125 is strong resistance. Pound yen, here we had quite a roller coaster, matter of around over 500 pips or even 600 pips. Sorry, 163.80. We reached resistance and bounced off that resistance quite nicely. It was also topped back in March and then fell, well, I would say nearly 700 pips in a matter of days to just under 157. So we were just under 164, and then we fell just under 157. It's around 700 pips. Now we're stabilizing 158 resistance, 156.60 is support. Quite a move for the dragon. 160 is resistance, 158, and then 162.50. Very, very impressive moves from pound yen, from the dragon, from Gepi. Okay, let's just take a look at oil. I see more comments, questions. $49 is the current level. Price of oil had lots of moves yesterday because of all those OPEC rumors. They won't decide anything. The price of oil fell. Wait, maybe they want to become friends once again and make some decisions, and oil bounced back. But basically, we're at the same place. $49 in WTI crude oil. 50, of course, is strong resistance. I don't expect anything coming out from those OPEC meetings in Vienna. We had too many disappointments. They don't think this time will be different, okay? Now I see a few more questions. Lucas says he's waiting for an approach to 78, then 20 pips, selling euro pound there. Okay. That's on euro pound, right? So here we are at 77.77. Okay. Yeah, quite a wide channel trading over there, so you expect some kind of bounce before a fall. Yeah, there's so many moving parts nowadays with euro pound. I mean, the referendum and the ECB at least. The pound was the main driver for quite some time, but this week is a bit different. Let's see what we have with this later on. And then you look to long, go long cable at 143.50. Yeah, makes sense. I see support somewhere around there as well. Okay. Let's talk about the events we have today. In the meantime, euro is strengthening, and then talk about the biggest market mover for the euro, the ECB decision. So today we have, well, at the moment, Spanish employment figures. Let's look at that. It's a monthly release of jobless claims. Number of unemployed, which is not seasonally adjusted. Calendar doesn't load. Sorry for that. Let's see if I can refresh, might help. Seem to have some issues with that. Sorry about that. Okay, let's talk about the events I prepared here on the slide. So we have the Spanish employment figure. Not such an important one, but still relevant. It's the fourth largest country. We have also UK construction PMI at 8:30 GMT. It's not the most important one. It used to be the strongest figure. Strongest not in terms of movements, but in terms of the absolute strength. The construction sector led the recovery in the UK. Services is the most important one, and that's released tomorrow. And today's construction PMI, I believe, will have little impact because of the focus on the referendum. And the ECB decision is at 11:45. No changes expected. The main focus is at 12:30, Draghi's press conference. And just before that, we have the ADP non-farm payrolls. Very important for tomorrow's non-farm payrolls. It's expected to be somewhat lower. Okay, remember that, and we'll talk about this tomorrow as well. But because we have this, we had this strike in Verizon during the month of May. Many expect the figures to be a bit skewed to the downside. Okay, but nevertheless, 12:15 ADP non-farm payrolls, 12:30 GMT jobless claims, the weekly release. It went back to normal after a spike. Okay, early in May. We have a speech from Mark Carney at 1 p.m. GMT. He usually moves the pound. He might warn again about a recession upon a Brexit. I don't think he'll talk about inflation though. It shouldn't be his most important speech, but it can certainly move markets. And we have crude oil inventories. Usually it's Wednesday. This time it's Thursday. We might have a build-up in inventories for a change. Okay. So that's quite a busy day today. A little bit for everybody. Okay, we have figures across the board. Before we go to the ECB preview, question here: anybody know what time the OPEC announcement is? Usually they don't have a specific time. I believe it will be sometime in the evening and afternoon, but let's guesstimate. They don't have a fixed time for that, but it should be today anyway, not tomorrow. Unless they're really getting close to an agreement. If you see that the timing is delayed, that means they're trying to work out some agreement, and it could be bullish for oil. But if it goes beyond today, but what time today I cannot really assess. Okay. So the special segment for today is clearly a preview for the ECB. The European Central Bank meets in Vienna for a change. They meet twice a year outside their headquarters in Frankfurt. I hope the security there is good enough to prevent another confetti incident like we had last year. No policy changes are on the cards. Why do I expect, not only me, why doesn't anybody expect a change today? A few reasons. In March, the last time they had fresh forecasts, they introduced lots of stimulus. They increased QE from 60 to 80 billion. A big change, more than markets had expected. They cut both the main lending rate from 0.05 to 0 and the deposit rate from minus 30 to minus 40 basis points, deeper in negative territory. They announced that within their QE they would also buy corporate bonds, and they announced new TLTROs, targeted long-term refinancing operations. That's a mouthful, but basically the idea is that the ECB lends money in a very cheap interest rate, in this case a negative interest rate. That means it pays banks on the condition that it's linked to the real economy. Now, both buying of corporate bonds and these TLTROs the implementation begins only now, okay, in June. That's enough of a reason not to act. In addition, back then in March, they told us that they're very reluctant to do anything else, and they upped the rhetoric for governments to do more. Okay, so these are all the reasons why no change is expected. If we'll have more QE or interest rate cut, it'll be a big shock, huge shock, and a total collapse for the euro. It will not happen. Okay. Then these are the things to watch out for in the press conference. I picked 5 points. So my 5 points are: first of all, we have fresh forecast. It doesn't happen every meeting, but it happens today. Are things improving? We did see growth moving higher. Germany was 0.7 quarter over quarter, and also Spain looks okay, and other countries are also I mean, we are seeing some growth, even stronger than in the US in Q1. Okay, that's the good thing. But the ECB's mandate is inflation. Inflation remains low. The last figures released just this week showed still minus 0.1 in headline inflation, which is bad news. The ECB's target is 2% or a bit below. Negative is not a bit below, it's total failure, and it's been going on for quite some time. Inflation around 0. Now, even core inflation is not going anywhere fast. It did move up from 0.7 to 0.8, but it's not good. Okay, so we might have better forecasts for growth, but worse for inflation. Okay, in this case, I don't think it'll be good for the euro, because if forecasts remain low for inflation, we could have a weaker, that implies further monetary easing. Second point, and it's going to be on the cards today, worth watching. I'm not sure it'll be a market mover, but back in February 2015, 1 week after the new Greek government came into office, they decided not to accept some kind of Greek bonds as collateral, making it harder basically for Greek banks to have liquidity. This hasn't changed, okay? They did allow the reopening of Greek banks by removing the ELA, the emergency loan facility, or whatever that's called. But the conditions are still harsh for Greece. So they might announce once again that they're lifting this waiver, making it easier for Greek banks to take money from the ECB. By the way, the ECB still does not buy Greek bonds in its QE program. So that would be interesting. That will be, of course, slightly positive for the Eurozone in general. Not a big market mover, but I think we'll have a lot of focus on that. Open door to more hikes is my third point. Probably not now. More moves, not hikes. Sorry, more cuts. It's only 3 months, and we're expecting the implementation of corporate bond buys and TLTRO 2 just now. So they'll say, "Oh, never say never," but not hint about anything soon. Helicopter money, I'm sure they'll be asked about that. That's the radical concept of basically giving money to the consumers here in the Eurozone so that they'll spend money. I mean, bypassing governments, bypassing banks. They'll say, once again, another denial. I expect them to continue denying it until a situation is warmed up, and in the future I don't rule it out, because I can't rule it out, because the ECB has a mandate. It doesn't want to fail its mandate. It doesn't want the euro to break up. And we had other radical ideas become reality, like QE, like negative rates, okay? So they'll be asked about that and deny they had a discussion. If Draghi will say that they did have a discussion about that, even though a very light and short discussion, it could hurt the euro, okay? And the question that will not be asked is about something that is really practical. Yesterday I attended a conversation with former finance minister of Greece, Yanis Varoufakis. He's here in Barcelona, in the University of Barcelona and the Department of Economics. And I asked him a question about helicopter money. He said ECB doesn't need to drop money from helicopters. It will be enough to buy European Investment Bank bonds, EIB bonds. That means the investment bank of the whole Eurozone will get money, cheap money from the ECB that it could lend or invest in the real economy. That would be much better than what the ECB is doing now, and even more legal, Varoufakis said, than the current and useless buying of German bunds, which are already very expensive, or French oats, I think they're called. Anyway, buying government bonds in general, which do not make any sense. And he convinced me with his argument. Sorry, but anyway, this is not such a radical idea, and it could do much more to help. And I think it's a question that will not be asked. Anyway, these are the 5 points. The most important market mover is the fresh forecasts. I believe that if they lower inflation forecasts for 2016, 2017, and also 2018, it'll be negative for the euro. If it'll be basically unchanged, it could be relatively positive. But many things also depend on the tone, on the open door, on the mood. If Draghi is in a good mood, he's more optimistic, it's good for the euro. I mean, of course, it's not only his personal mood, but also his assessment of the economy. And if it's negative for the economy. Okay, so these are the things to watch out for in this ECB preview. Let's also look at levels for euro dollar. Currently 112.13 at the time of the show. 112.50 is first level of resistance, followed by 113.35 and 114.60 on the top side if we have a really bullish ECB. If we have a bearish ECB, 111.30, 110.70 and 110 to the downside. If we have helicopter money and crazy announcements, 108.20 and 107.10 are the levels to watch. Okay, so that's the long ECB preview for today. Let's see some questions, comments related to that. Question here by Luca. Do you expect another euro-dollar rally on ECB's wait and see? Well, if we have a basically balanced event, yeah, I think we have now currently a trend of, I mean, there's the hot air came out of the US dollar. That means if the ECB is relatively neutral, I believe we could have not a euro-dollar rally, but the euro-dollar moving a bit higher. Okay, if they have a perfectly balanced picture. Okay, Ed asks, like I was saying last year, not enough graded bonds to buy, so we'll have to look at buying corporate bonds, creating a bigger false market for stocks. Yeah, I believe we'll see that. Well, they're beginning to buy corporate bonds this month. Of course, it indirectly supports stocks because if the ECB buys Volkswagen bonds, it of course makes lending cheaper for Volkswagen, for VW, and it raises their stocks. Same goes for any big French company, Spanish, Italian, or Greek. Oil is taking off, Lucas says. Let's take a look. Maybe we have some news coming out of there while I was talking about the ECB. 49.36, yeah, a move to the upside on oil prices. Let me check out, see if we have any news about that. Maybe some OPEC headlines that I'm not aware of. Well, first of all, for this, in Spain, net unemployment change fell by almost 120,000, better than 100,000 expected. So that's good news. Unfortunately, it's very seasonal, of course, so it's lots of tourism, okay, which is not bad. Better have some kind of activity in it than nothing. But anyway, regarding oil, I don't see any new headlines. $50 in WTI is the key level, and I would say 47 is to the downside. Again, I think that any rally in oil could be a sell opportunity, not trading advice, but given the past, OPEC did not make any real decisions, okay? Question here from Ed. What affects Greek employment figures is not told, but summer workers go on benefits for the winter. So many Greeks only work half the year, but many get cash in hand jobs. But in the UK it's present. Yeah, there's been in Greece lots of cheating. Also here in Spain, people that work, and they call it here in Spain in black, or Economia B, B economy, and they still get jobless claims benefits. I think governments are cracking down on this, so it isn't as bad as it used to be. And there's also real suffering and real unemployment. I mean, I would say that not 20% figure, 21% here in Spain might be a bit exaggerated, but also the growth figures are exaggerated. And I guess the same goes for Greece. Don't believe all the official figures, but in general, the situation is dire, okay? I mean, if you talk to Spaniards, they will acknowledge that something, I mean, we're not at the bottom, at least in tourism in Barcelona. There's even too much tourism here, but it's not that the economy is steaming hot, okay? Lucas says that would make a lot more sense for the economy. The EIB bond thing, yeah. It's not only Varoufakis saying this. It's not such a radical idea. Also, QE was considered radical. I believe they'll reach it at the end, but the ECB always moves slowly. Europe in general moves slowly. QE was, there was a gap of around 6 years between the US QE and the European one. And forward guidance, the same goes with that as well. So yeah, hopefully we'll get to see another appearance by Varoufakis. I even got my picture taken with him. He's a rock star. Anyway, let's continue. Euro dollar at the moment also strengthening just a bit. Okay, we talked about events for today. We had the special preview. Oh, my calendar is back. Good news. The gremlins have gone away. I'll just mention a few more things. We have a special coverage of the ECB today. Valeria Bednarik, Mauricio Carrillo, and myself, you're welcome to join. Can't remember the exact hour. Let me try to get that information quick. You're, of course, all welcome. Hopefully it'll not be a non-event like a few of the previous ones we've covered together. So that begins at 11:30 GMT. Here's the event. Let me share it with you on the chat right now. Okay. Problem, there's been many corruption cases linked to EIB project in the past. Oh, okay, I didn't know that. So maybe the EIB needs reform or just to destroy this institution and build and copy and make another one instead. But the idea of a European investment bank, in general, I think it's a good idea. And even in Germany, the autobahns need some construction. In general, Europe lacks investment. The level of investment in Germany is the lowest since World War II, basically. So the same goes also for basically other countries, all other countries. The mints won't give Venezuela credit to print, so they won't give Greece. So changing currency is difficult. If they could just clean it up, yeah. I'm not sure Greece will leave the currency. It's also a political currency. Perhaps they prefer. First of all, moving out of the Eurozone is a huge, huge problem. Okay? Because they don't have their mint. It's not like Denmark or Switzerland. They have some kind of pegs to the euro, and then they have their own currency. It just changes in value. Or Argentina or Venezuela, in that case, it's a problem. They'll have to print a new currency. It's a big mess. In addition, it's a political thing. I heard a recorded interview with Tony Blair yesterday, former British Prime Minister. He had a clear idea. I don't support him on many things, but he explained that during his time, he politically supported the UK joining the euro, something, of course, nobody agrees with. But he said, we're looking for the economic case, and as they didn't have the economic reasoning to do that, they never joined. Okay. Now, of course, everybody thinks that the UK was lucky not to join, but remember, it's a political project more than an economic project. Yeah, I don't think there is a good chance that Greece will leave, but I'm not sure that could happen. Lucas says I met one of its MD, was an Italian, now he's in jail for giving EIB financing to friends of friends. Obviously, the project went bust and the EIB financing down the drain. Its bank account had grown bigger. Yeah, these things also happen here in Spain too often. And these useless airports and hellholes are built. Nobody flies there. The local politicians are paid by construction companies to support their case, their bid. Yeah, lots of corruption scandals also here. Okay, so let's begin the wrap-up for today. This is the wrap-up for the live market open for Thursday, June 2nd. Markets are moving, and today we have big events, especially for euro dollar. But let's begin with the top. Non-farm payrolls expectations are unchanged after an okay manufacturing PMI in the United States. OPEC oil prices are rising as we speak. Rumors about quotas, making new friends and bridges, a more relaxed atmosphere, but I'm not convinced that we'll really have an agreement, at least not now. Brexit polls are pushing back against the Remain campaign. Looks very, very tight and weighing on the pound. And the yen is strengthening because of another fall in the Nikkei in Japanese stocks, continuing the move from yesterday. Yesterday's figures, well, one thing that stood out for me is that milk in New Zealand, the GBT global dairy trade, had a second consecutive rise, and that supported the kiwi. And other figures were basically balanced and didn't have such a big impact. Today's calendar, we had the beat on Spanish employment, a bit supportive for the euro. We have UK construction PMI at 8:30 GMT. Should be a small distraction from the Brexit, and it's not the most important PMI. The most important one is coming out tomorrow. The main events, ECB rate decision the decision itself is at 11:45. Our live coverage begins at 11:30. At 12:15, we have the ADP non-farm payrolls. Big event big hint for the non-farm payrolls tomorrow. To answer Jack's questions, pairs to watch, of course, euro dollar. Two hints for the non-farm payrolls, jobless claims, more importantly ADP, and the ECB rate decision all at the same time. Clearly euro dollar, I'm also frustrated with the recent ranges, so I wanted to explode. Draghi's press conference at 12:30. We'll cover the main points soon. And a speech by Mark Carney, the governor of the Bank of England, at 1 GMT. And crude oil inventories, I believe they could be positive. That means negative for oil. And in general, I'm skeptical about this rise in oil prices. To talk about the ECB, no policy changes are expected because we're just now beginning the implementation of corporate bond buys and the TLTRO2, which, well, I'm skeptical about that as well. But corporate bond buys should make a difference. And the ECB in general is in a sort of wait-and-see mode. If we have a wait-and-see mode, it should be slightly positive for the euro, nothing earth-shattering. The biggest figure to watch, the biggest event in the press conference comes at the beginning with fresh forecasts. Once every 3 months, we have fresh forecasts. I believe we'll have stronger growth figures, but lower inflation. Lower inflation could weigh on the euro. Other things to watch are some relief for Greece, a waiver for accepting Greek bonds as collateral, open door to more moves. The door will likely remain relatively shut, at least for now. Helicopter money, probably not in the statement, but we'll have a question about that. If Draghi said they had a discussion about that, it'll be very negative for the euro. They probably didn't have a discussion. He'll deny it once again. Remember, don't believe anything until it's fully denied. Well, the ECB moves slowly. And one thing that I want to put on the agenda, I put on the agenda yesterday to Yanis Varoufakis, is helicopter money, and he answered with that the ECB should buy EIB bonds, European Investment Bank. That would be more legal and more helpful to the Eurozone economies. Okay, so yeah, that's the main event for today, clearly. That was a quick preview as well. And remember, we have always a full recording of the show, a recording of the special segment, which was a more detailed ECB preview and of the wrap-up. Before we finish the wrap-up, we didn't talk about currency pairs in the wrap-up as we do as usual. 112.50 is the next line of resistance on euro dollar, followed by 113.35. Support 111.80, weak support 111.30, also weak, and strong support at 110.70, followed by 110. Hopefully we'll see bigger movements in euro dollar today, not the regular 50 to 70 pips. Pound dollar looks to be bouncing, at least for now. 143.70 is support, 145 resistance, high resistance 145.80, 146.50, low support 142.80. Dollar yen under 109 at the moment, 108.25 support, 110.50 is resistance. Dollar CAD erasing some of the previous lines. very choppy. 131.70 and 130 are lines to watch. Further support 129.10. On the downside, Aussie dollar 72.22 at the moment. Very clear resistance there at around 73 number. 71.75 is support, followed by 71.40. The Kiwi dollar 68 at the moment, suffering a slide. It went up very nicely yesterday on that but better second consecutive rise in milk prices. 68.40 is resistance. 67.20 and 66.70 are lines of support. Okay. Thank you everybody for coming. I see more questions here. Greek Central Bank has mint for $10 euro notes only. Yeah, because the mints are spread out across the continent. Again, if they move to a different currency, this mint for 10 euro note will not be really useful. Okay. Yeah. Oh, that's interesting. Thanks for sharing. We have here Ed shares with us a document from the ECB telling us where coins and banknotes are produced. Okay. Yeah, it's interesting. So regarding coins, well, spread out in Belgium, Germany, Greece, Spain, Estonia, France, basically all over. Thank you for that. Anyway, thank you very much for coming. Today, hopefully, we'll have a big day in markets. Hopefully, we'll have euro dollar move. Remember, the pound will move on polls. The Canadian dollar on changes in oil, which today, with the conclusion of OPEC and with the crude oil inventories, it should also be interesting. And we'll have a shape up of expectations for tomorrow's on-for payrolls. The dollar is not shining as it did in May, but I wouldn't say it's collapsing. All right, that's it. So I hope to see everybody in the live coverage for the ECB beginning at 11:30 GMT. And that's it. Thank you. Have a great day in markets, and see you soon. Ciao. Bye-bye.